Welcome to Matters Financial and Geopolitical from the Frontier. Hope you had a great weekend. We had a quiet one. Home thoughts. I love these photographs. The sun sets over the beach near the fort of Sebastião, the oldest standing fort in sub-Saharan Africa. Photos by Luca Locatelli. In the sun-drenched waters of the Indian Ocean, a small coral island sits at the mouth of Mossorul Bay, where the waves melt seamlessly into the sky. Ilha de Mozambique, or the island of Mozambique, was used as a harbour and trading centre by Arab merchants between the 10th and 15th centuries, before Portuguese explorer Vasco da Gama landed on the island in 1498 and claimed it for Portugal. For nearly 400 years, it was the colonial capital of Portuguese East Africa, positioned on the maritime trade routes for gold, spices and slaves. By 1907, shortly after the collapse of the slave trade, the capital moved to Lourenço Marques, and the island's population rapidly dwindled. This mass exodus protected it from the ravages of modern development during the 20th century, effectively freezing the island in time. Been to Maputo several times and not been up there. I'd love to go up there, but of course, just to remind you, the dhow could come all the way from India down to the island of Mozambique because of the phenomena of the monsoon wind and its reversible nature. So it brought you all the way down, and the wind after a couple of months turned around and took you back home. And this was what set up this area as an area of long-range navigation, cultural exchange. And I, for one, believe in the resurgence or risorgimento of the Indian Ocean. I couldn't resist this tweet. What is it like to be a sea turtle? Thought for the day. Then, because I was quoting Kapuscinski in my article, which I will get to momentarily, one of my favorite articles, and I must say it does make me want to knock back a cognac. There is a lot of warmth in an old cognac, a lot of sun. It will go to one's head calmly, without hurry. Then I like this: watch as thousands of starlings flying graceful yet eerie murmurations without colliding. Political reflections. The big news was out of Germany, where the German Chancellor Angela Merkel declared failure in her bid to form a new government, throwing the future of Europe's longest-serving leader into doubt and potentially pointing the world's fourth biggest economy toward new elections. The euro fell 117.34 last. A month of exploratory coalition talks ended in a dramatic collapse just before midnight on Sunday in Berlin, when the pro-market Free Democratic Party, one of the prospective partners, walked out on a deal that Merkel said had been within reach. This brings instability to the very beating heart of the European project. I came across some videos from a chap called, you'll have a look at the link, and he's gone into these very tricky areas in Kenya with a live feed. And then he keeps up this quite extraordinary commentary whilst he's in there. This is from the welcoming rally for Raila turns into a riot. It's about 7 or 8 minutes. Quite extraordinary. Robert Mugabe met his generals at State House in Harare on Sunday, then had a press conference where he was expected to resign, and he finished off by saying, "I thank you and good night," without announcing his resignation. Hervé, who's a lawyer in the DRC, says Mugabe's speech is the reflection of the kind of legal and complex questions he put on the table during the negotiations, and that his audience could not answer to. Engaging in discussions with Bob was a very risky enterprise for the plotters. Indeed it was. Have a look at this graffiti in support of the ruling Zanu-PF party on a building in Harare. Listen to his full speech. He's vowed to stay on. This full speech was transmitted by the BBC. A top aide described Mugabe munching corn as Zimbabwe celebrates to the FT, as Zimbabweans poured onto the streets of Harare to celebrate the expected departure of the man who has ruled over them for nearly 40 years. Mugabe sat with a friend munching corn and reminiscing about old times. He was talking about his school days in the 1930s and anthropology and how it impacted on the colonial perception of Africans and their intellect, said George Charamba, who has been the president's spokesman and one of his closest advisors for 17 years. Mr. Charamba, who said he spent 5 hours with Mr. Mugabe on Saturday and left him just 20 minutes before talking to the Financial Times, said the 93-year-old liberation hero remained on form in spite of the storms raging around him. In the midst of such a highly charged intellectual conversation, we were munching corn, he said. Oh my God, he was very upbeat and chatty. Unless Mr. Mugabe can muster his legendary cunning to wriggle out of what appears to be a desperate situation, it also supports the view of those who say Mr. Mugabe, surrounded by sycophants and increasingly frail, is in denial about what is happening to him. Mr. Charamba insisted these were derivative actions and fireworks for the masses. The principal action, the hamlet of this drama, is the president and the soldiers, he said. He's trying to bargain for a dignified exit, but he should just smell the coffee and gap it. Zanu-PF, of course, tweeted very cleverly, "We have recalled President Mugabe. He is no longer the president of Zanu-PF. May he leave with grace," they tweeted. That sums it up. My piece for over the weekend was about this and was headlined, "The Genie is Out of the Bottle." It is authority that provokes revolution. This occurs when a feeling of impunity takes root among the elite. We are allowed anything, we can do anything. This is a delusion, but it rests on a certain rational foundation. For a while, it does indeed look as if they can do whatever they want. Scandal after scandal and illegality after illegality go unpunished. The people remain silent. They are afraid and do not yet feel their own strength. At the same time, they keep a detailed account of the wrongs, which at one particular moment are to be added up. The choice of that moment is the greatest riddle of history. That was Kapuscinski, page 106, Shah of Shahs. You will recall that only last year, in a speech before the African Union in 2016, Mugabe said he would remain at the helm until God says, "Come." What is clear is that an old man's mind and political antennae were properly scrambled by an ambitious wife. A wife who was always untenable and whose political longevity was entirely correlated to the presence of her husband. The fast-moving events in Harare will culminate in the dismissal of President Robert Gabriel Mugabe, the reinstatement of the vice president he fired, Emerson Mnangagwa, Mr. Mnangagwa, aka the crocodile. A crocodile patiently waits for his target, pretending to be a rock. At times you think he doesn't react or doesn't have any solution to what is happening. He doesn't show irritation until the optimal moment, and then he strikes. And when he does, he doesn't miss his target. My friend Hervé Gogo rebutted Reuters, saying the analogy to Kaikeshku is misplaced. This isn't a revolution, but just an aggiornamento inside Zanu-PF, and everyone is currently negotiating with Mugabe. The pictures from Harare on Saturday spoke to a people power which is a genie which would be difficult, if not impossible, to put back in its bottle. It's like Christmas, said one marcher, Fred Mugabe. He had a warning for whoever takes over Zimbabwe. If the next leader does the same, we're going to come out again. I agree with US Assistant Secretary of State for African Affairs Yamamoto, who said it's a transition to a new era for Zimbabwe. That's really what we're hoping for. The military, which launched its decapitation, are certainly set to shape the outcome, but now have a tiger by the tail. Interestingly, the military have been walking on linguistic eggshells and sidestepping the word coup with finesse. Zimbabwe's economy has fallen to the 20th biggest in sub-Saharan Africa from being the 10th when President Mugabe came into power almost 4 decades ago. The economy has halved in size since 2000. As of October, the country owed lenders, including the IMF, World Bank, and African Development Bank, about $9 billion, according to the Finance Ministry. Hyperinflation peaked at about 500 billion% at the end of 2008, according to the IMF, leading to Zimbabwe abandoning its own currency in favor of a basket of foreign exchange, including the South African rand, the dollar, the euro, and the pound, as well as the so-called bond notes printed by the government. After 2.5 years of deflation, consumer prices have started rising again in February, driven by a shortage of cash and higher food costs, and it's difficult to see how another bout of hyperinflation is avoided. The dislocation in the economy is evidenced in the price of Bitcoin, which jumped as high as $13,499, almost double the rate at which it trades in international markets, according to prices cited on Golig's website. Further evidence of economic disequilibrium is seen in the performance of the stock market. Before a correction at the end of the week, the Zimbabwe Industrial Index had jumped 390% year to date, and the MSCI Zimbabwe Index 420%. The country's shares are trading at a 475% premium to cash, according to an Exotics analysis of Old Mutual data. That difference has to collapse for there to be any chance of Zimbabwe normalizing. This difference started to collapse on Friday with the Zimbabwe Stock Exchange dropping $1.5 billion in value and the industrial index shedding 11.32%. What is clear is that Zimbabwe is entering a new normal, and that in the medium term, Zimbabwe has the potential to be one of the fastest growing economies in Africa. The people want to grab that opportunity with both hands. If Zanu-PF want to be part of that new, more optimistic future, they need to invite the opposition into government, look for a big cash boost from the international community in order to stabilize them now. Zimbabweans have only known one leader, and that leader, I said, is now gone. He hasn't gone yet, but he's going. Zimbabweans say Mugabe must quit now, but more talks planned. AP. Mr. Mugabe, on the other hand, he dismissed as a senile old man who has lost control of his wife. In the Globe and Mail, Geoffrey York quoted Tendai Biti, who said, "Hubristic arrogance. He was in power so long, he became so comfortable, complacent, and overconfident. He's stubborn, and he forgot the nature of the state around him. This is a military state, the state of securocrats. He forgot that he was just a representative of a securocratic state. And it will always dump you if you don't deserve it, so they fired him." Mr. Mugabe's own blunders led to his fall. Mr. Gwede says, when someone is in power for 37 years, there is the myth of invincibility. And Mugabe himself believed it. He forgot that his rule was based on the security agencies, not the popular will. He showed arrogance, and the military decided that enough was enough. He was aware that something was afoot, but he couldn't stop it. One of his biggest blunders was to allow his politically inexperienced wife to share his power. She has an inflated sense of superiority, but she lacks the emotional intelligence to know that you shouldn't insult people in public. She seems to revel in the limelight. Guardian produced pictures of protesters in Zimbabwe calling for Mugabe to step down. The whole mood, very inclusive, very well behaved. It really is a miraculous response. I like this quotation: when you have two persons in a room, you do not have two, you have six. What each person is, what each person thinks he or she is, and what each person thinks the other is. Antonio Gutierrez on Trump and North Korea. You will recall when I wrote my piece about the Crown Prince of Saudi Arabia, I said then we could witness a massive $1 trillion disgorge right here. Seems to be the main thrust of these arrests. 30th of December, I said the optimal portfolio at this moment looks like this: long Bitcoin, short gold. Crypto assets market cap is now $222 billion, 16 times as much as a year ago. Guess who's off to a good start of the week? Bitcoin is at more than 8,000. We're just below it right now. Take a look at this chart of European 10-year bond yields. Quite interesting to see how much Draghi brought them lower. Currency markets: euro dollar 117.32. This is all because of the German coalition talks collapsing. Dollar index 93.67. Japanese yen 112.08. Swiss franc 09885, the pound 132.03, the Australian dollar, which had a very poor Friday, 0.7563, rebounding a little. India rupee 65.01, South Korean won 1100.56, Brazilian real 325.74, Egyptian pound 17.728, South African rand 14.0327. Dollar index, take a look at this chart from T Commodity. You know, that 93.50 area I banged on about for a long time, still pretty key. Have a look at it. Euro dollar, as I said, I'll put up a 1 month chart. Look at it. It's had a bit of a move lower, 117.32. Commodity markets: investors in Saudi Arabia's stock market are more concerned with political headlines coming out of Riyadh than oil prices. Oil stock correlation turns negative by the most since 2014. And in my piece, the capture of a 32-year-old wannabe king and the future price of crude oil, I said in an era of lashings of surplus oil, the crude oil markets have priced geopolitical risk at close to zero. Since late June, the markets have been repricing geopolitical risk, and in particular, events in the Kingdom of Saudi Arabia, still the largest supplier of crude oil to global markets, have led the reprice, which is what Holger is talking about. Saudi Arabia and its allies, UAE, Bahrain, Kuwait, are caught in an ever-tightening sheer pincer. The paranoia in the palaces in Saudi Arabia is real and existential. And what is also clear is that Bibi Netanyahu, MBZ, Jared Kushner, a Trump carte blanche, have all leveraged this existential paranoia to effect not a state capture, but a kingdom capture. And so the Guptas were a precursor for this particular capture. This is a chart again from T Commodity of WTI crude oil, last trading $56.75. Gold last $12.91. Emerging markets: world-beating emerging market stocks rally will endure for 2 more years, this fund says. Returning to Africa, Harare, surreal tonight. People celebrating, giving hugs to soldiers, blasting music in the streets. As this Zimbabwe, that was before the president made his intervention. What will happen to the Mugabe boys, asks Hall about Africa. I like this image of the day from Resurrect Zim, powerful. Mugabe and Dos Santos, Africa's old men, seem finally to be fading away. While there might not be any direct connection between these two events, they suggest some intriguing comparisons. In both countries, ruling families seem to have failed to secure themselves in power. When Mugabe, as leader of the Zanu-PF, became ruler of Zimbabwe at independence in April 1980, José Eduardo dos Santos was already president of Angola. He had succeeded to that position after the death of Augustino Neto in September 1979. Dos Santos had to deal with external intervention and over 2 decades of civil war during which he ruled dictatorially. Mugabe, despite a facade of constitutionalism and regular elections, also became increasingly dictatorial. He abandoned adherence to the rule of law and his country's economy collapsed. Angola became notorious for the scale of the corruption linked especially to its oil riches. Zimbabwe went from breadbasket to basket case. With the great majority of the people of both countries living in dire poverty, Dos Santos flew to Europe when he needed medical attention, while Mugabe went to Singapore. Though Dos Santos was probably as reluctant as Mugabe to give up power, he decided to quit as president of the country and try to retain influence through the ruling party and members of his family. Mugabe tried to impose his wife on his party as his chosen successor, and then cling on to his positions even when the army took effective control of his country. Given recent developments in Luanda and Harare, it would seem that neither of these two old men have succeeded in securing their family dynasties. Following the victory of the ruling MPLA in the general election held in August this year, Lourenço took over as president in September, but Dos Santos remained president of the MPLA, and clearly expected Lourenço to look after his interests and that of his family and become enormously wealthy. From the action Lourenço has now taken against Dos Santos' billionaire daughter Isabel, it would seem that he's becoming his own man. It appears he wishes to distance himself from the Dos Santos family, which for many Angolans is associated with corruption on a vast scale. Interesting correlation between the two events. South African oil shares up 18.71% this year, about 1% of a record. That record has been largely driven by Naspers. Dollar versus Rand had a rally on Friday, got below 14, but back at 14.03. Nigerian oil share up 36.57% this year. Ghana Stock Exchange up 49.24% so far this year. Tanzania annual growth in credit to the private sector, often used to assess private sector expansion, has plummeted from 25% in November 2015, the month Magufuli took office, to 1% in July 2017. African debt servicing costs have hit a 16-year high. The governments of major sub-Saharan African nations are more indebted than at any point since 2005, when the IMF and the World Bank were writing off tens of billions of US dollars of debt under their heavily indebted poor countries initiative. Worse still, the cost of servicing this debt has risen to an average of 12.2% of government revenues, up from a low of 5.4% in 2011, and the highest figure since 2001, before the wave of debt forgiveness. The long-term forces that are driving up debt are not really under control, said Jan Friedrich of Fitch. One of the fundamental issues is relatively weak public financial management in most sovereigns in the region. The figures come just weeks after Patrick Njoroge, governor of the Central Bank of Kenya, warned that a secular increase in African public debt has pushed several governments towards a debt servicing threshold beyond which they should not borrow. Until recently, the IMF has played down such concerns, but in October it said that a continuation of the elevated pace of debt accumulation seen in 2014 to 2016 would increase public debt to unsustainable levels, not just among African oil exporters, which have seen their public sector debt double to an average of 45% of GDP, but even in non-resource economies, where the rise has been more modest, from 46 to 59%. The big ruling on the presidential petition is set for today here in Kenya at 10 a.m. Our very own Tiananmen Square photo. This is from Frank Hook. More police units. Take a look at these videos from this fellow World with Jan, he calls his hashtag. Yesterday, this is footage from the arrival of police units in Kibera, and then take a look at the rally from Friday. Unpacking Raila's resistance, Africa Confidential, as the country simmers after its election rerun, churchmen take to diplomacy and politicians to the street and social media. In an eloquent address to a full auditorium at the Center for Strategic and International Studies, CSIS, in Washington, on the morning of 9th November, Odinga, leader of NASA, explained for the first time in detail what he had in mind for resolving Kenya's deepening political crisis. He wanted President Kenyatta to step down immediately, since his tenure legally expired on the 1st of November, and demanded that his government be replaced by an interim government of shared power between NASA and Uhuru's Jubilee administration. This, he said, is because Kenya is hurtling towards outright dictatorship under a reign of terror targeting the Electoral Commission and the judiciary. That strategy is about to run out of the road today and be guillotined. Nairobi all shares up 22.34% year to date. NSE 20 is up 17.07% so far year to date. And this exhibit 19 Nairobi City from M. War. It's an attractive photograph, I thought. Once again, thank you for stopping by. If you fancy keeping an eye on the stock market, just register on richlive.co.ke. Get a password, use that password to log on, and you can follow the real time to your heart's desire. Once again, thank you for stopping by.